Welcome back. I'm Peter St. Onge. This is a weekly roundup of my daily videos on the economy and freedom, where I cut through the BS and lay out what the gaslighting clowns pulled out of their hats this week and what is coming next. The China trade war just blew up. Stock markets got clubbed like a baby seal. Bitcoin dumped 10%. Gold soared to $4,035, up 51% for the year. So the U.S.-China trade war had been settling down, looking like a deal was coming by the November 11th deadline. Both sides were making happy noises. President Xi and President Trump were scheduled to meet in a few weeks, and tariffs on China continued at a pedestrian 30%. Now, 30 is close to what everybody else pays, so Japan, Korea, and the EU are all paying 15% now. Mexico's at 25% for non-USMCA goods, and Canada's at 35%, which is actually higher than China. Now, last week, it all blew up when China imposed a worldwide export ban on so-called rare earth minerals, what the Wall Street Journal called a, quote, bombshell. So rare earths are essential for everything from smartphones and computer chips to electric vehicles to military aircraft and drones. A single F-35 uses nearly half a ton of rare earths. Note, rare earths are not actually rare. The term comes from the fact you have to dig a lot of dirt to get a little bit of element. So we've got plenty in Wyoming, Alaska, even Missouri. But environmentalists have made it basically impossible to mine them, so we are completely dependent on China for our military production. Trump's response was fierce in a Truth Social post. He called China's move, quote, extremely hostile, promising that as of November, he will impose an additional 100% tariff on China, bringing it to 130%, and that he would unleash new and interesting punishments. Now, Trump does have a lot of punishments to choose from, including export controls of critical American chips or software to China, antitrust or anti-dumping sanctions, origin rules to crack down on Chinese re-exports, IP lawsuits for Chinese tech theft, canceling visas for Chinese government officials or even Chinese students, of which there are almost 300,000 in the U.S., or the nuclear option, restrict Chinese access to American financial markets, which account for $850 billion worth of Chinese companies raising cheap money in America. Note, there are precisely 0 listed American companies in China. There's even the little detail of a roughly $2 trillion gold-denominated debt China owes us dating from World War II, larger than all Chinese holdings of American debt. American presidents have pretended that debt does not exist, but Trump could change all that. So as next, China's rare earths ban was their nuclear option. Using it says they are desperate for a deal. In a recent video, I talked about how China's running out of runway on the trade war. It's already cost Beijing trillions in stimulus, money they can't afford, with out-of-control debts in local governments and property companies. Meanwhile, China's been surviving by dumping below cost into Europe and the Third World. One recent news report talked about Chinese jeans selling for 80 cents in Indonesia. Those countries are now pushing back with new Chinese tariffs from the EU to Mexico. So both sides want a deal. China just showed it needs a deal. Still, China cannot just back down. President Xi would be putting himself in political jeopardy from hardline rivals. So there could be more fireworks and more market carnage. But the last major trade deal is coming to the endgame. Laid-off government workers may not get back pay at all, according to a new memo from our based OMB Director Russ Vought, raising the tantalizing prospect that 750,000 useless or non-essential government workers could be forced to go out and get grown-up jobs. Last week, an OMB memo leaked, arguing that furloughed workers are not guaranteed compensation during the shutdown, according to the 2019 law that governs shutdown back pay. This matters partly because federal workers make $147,000 a year, including benefits, meaning these useless workers are costing us $3 billion a week to nap on the couch instead of napping in the office. But it also matters because it raises pressure on Democrats who are caught between the rock of angry activists forcing them to fight and 750,000 federal workers who are the Democrats' real base, giving Democrats roughly 92% of their votes and their donations, while their tax-funded government unions provide the foot soldiers for Democrats in elections. In a recent video, I mentioned how Republicans are holding the line on the shutdown because polling shows voters are on their side. Republican odds of winning the midterms are actually up since the shutdown began. Trump doubled down last week, saying he's happy to negotiate with Democrats after the government reopens. In other words, release the hostages and then we can talk about the $1 million and the helicopter. Now, Vote's memo hinges on the so-called Government Employee Fair Treatment Act, GETFA, which was passed after the last shutdown in 2018 over Trump's border wall. The law guarantees back pay after shutdown, but only, quote, subject to enactment of appropriations after the shutdown. In other words, back pay is allowed, but it is not required. The key here is the distinction in federal law between authorizing spending, allowing it, and appropriating spending, which is cutting the check. So the 2019 law merely authorizes back pay. It does not appropriate it. That takes a separate act of Congress. So the administration's stance is only essential workers, the ones who are still working, will get back pay, while the 750,000 non-essential workers who are not working, and which are the ones Trump thinks we don't need anyway, will not. Now, it's not clear if this will stand up. Obama judges will presumably do their thing. But worst case, we're back to the magic 61-day countdown, when established law says you can fire federal workers permanently after 60 days of shutdown. Either way, Trump is turning up the temperature on Democrats, so they either quit holding the budget hostage to Obamacare subsidies and health care for illegals, or kiss their army of federal bureaucrats goodbye. So what's next? Prediction market Kalshi is now saying 33 days of shutdown. That's up from 5 when it started. Democrats almost certainly won't surrender before the October 18th No Kings rally, when their crazies will be flexing. But given polling says they're losing, they'll probably cry uncle long before 61 days, in which case Vote's memo comes into play, potentially saving taxpayers billions and hopefully sending thousands of useless bureaucrats into grown-up jobs. A word from our sponsor. If you own gold, and many of you do, you already understand how it protects your wealth from the insanity coming out of Washington. The inflation, the recessions, the wars. But with monetary metals, there's a way to actually earn a yield of up to 4% on your gold, paid in more ounces of gold. You retain ownership of real, allocated physical gold with no storage costs while your ounces grow every month outside the banking system. If you're serious about protecting your future and building your legacy, head to monetarymetals.com/Peter to get started. Now back to our show. The silver squeeze is on as the white knight rides amid a global shortage that has already taken silver prices up 70% on the year, crossing $52 an ounce for the first time in history. Is it time to melt the silverware? After surging 27% in just 2 months, last week silver hit something called backwardation, which is when it's in such short supply that the current price is above its future price. That is not normal. In fact, silver only went backward for one single day between the 1930s, when silver futures were normalized, and the 2008 crisis. That was in 1980, when the notorious Hunt brothers tried to corner the silver market, failed spectacularly, and set off a mini financial panic. But since the 2008 crisis, silver has gone backwards 4 times. That's roughly once every 4 years. In case you're curious, gold also had just 2 backward days between the 30s and 2008, and it's also gone backwards 4 times since then, suggesting our financial system is now systemically unstable, as in maybe you should buy some silver or gold. What's driving the silver squeeze and gold's gallop is the so-called debasement trade, where ballooning government debt is driving both inflation and default concerns. That's driven a flood of new money into gold and silver ETFs. Both gained about 30% on the year in terms of new money. But silver gets an extra boost from massive demand for industrial silver in AI data centers, solar panels, and electric vehicles. Given AI alone now accounts for 1/5 of the stock market, that's a lot of chips to feed. All this demand is crashing into historically tight supply, with above-ground physical silver inventories down almost 20% since 2021, despite soaring demand. This is driving annualized silver borrowing rates past 30% in London That's by far the highest in history. Normally, interest rates are just around 4%. Now, usually the pressure valve on silver and gold is expand mining. But silver mining has actually been stagnant since 2019. This is because most silver mining is a byproduct of industrial mining like copper or zinc, where there's falling Chinese demand as their economy slowed first in COVID and now in the trade war. So as next, silver is famously volatile, about twice the stock market and 3 times gold. In fact, in the past year, silver has been half as volatile as Bitcoin. As for what's next, previous episodes of silver backwardation have been a mixed bag. Twice, it kept rallying, rising 52% in 2008 and 79% in COVID. Twice it crashed, dropping 60% in the 1980 Hunt Brothers Corner and 23% in a random 2021 meme frenzy. And the last time in 2011, it zigzagged, coming out even 12 months later. So who knows, but big picture, the debasement trade will keep boosting silver, along with gold and Bitcoin, while the extra boost silver is getting from the AI bubble probably has room to run, suggesting silver volatility isn't going away, and gold could be next. The permanent federal firings have begun, while President Trump finds creative ways to pay the military, in fact, to pay everything that's popular, while starving $2 trillion of federal spending that Democrats and their donors use as a permanent slush fund. Best shutdown ever. Last week, Base OMB Director Russ Vought issued the first raft of permanent firings called reductions in force, or RIFs. Now, RIFs start the clock ticking for thousands of bureaucrats, since if the shutdown is still going 60 days after a reduction in force, the parasite, or not essential bureaucrat, is gone for good. So far, the IRFs target Democrat fiefdoms like Health and Human Services, Housing and Urban Development, the IRS, and Environmental Protection Agency. Now, it was only 4,000 IRFs in this first round, but Vought and Trump are signaling much more to come. Meanwhile, after Trump said he would use tariff revenue to cover food aid for pregnant women, called WIC, last week, he announced the military would also be getting paid using $8 billion unused dollars at the Department of War, with another $50 to $100 billion lurking in unspent accounts, plus $31 billion of border and military money, the big beautiful bill, cleverly tagged as mandatory meaning it keeps going even during a shutdown. Twitter commenter Latinx adjacent Ph.D. compared this to Julius Caesar paying his legions by seizing his enemy's assets, which is pretty close. Caesar did confiscate Democrats' or Optimates' estates to pay his legions. So far in the shutdown, Trump is doing exactly what I hoped, find creative ways to keep the popular stuff, from school lunches and WIC to Social Security and Medicare to air traffic, deportations, and the military, all whilst defunding the useless crap Democrats live off. This has kept voters on Trump's side. Indeed, many now wonder why we were wasting $2 trillion a year on people and programs that are non-essential. Meanwhile, Republicans' odds for the midterms, the all-important game in Washington right now, have actually improved since the shutdown. So a sex between public polling, threats to federal back pay, and now bona fide RIFs, Democrats are caving. 3 Democrat senators are already voting with Republicans to reopen government with no new spending. That's John Fetterman, Nevada's Cortez Masto, and Maine Independent Angus King. Alas, it takes another 4 to overcome the filibuster and actually reopen government. In a recent interview, Louisiana Senator John Kennedy suggested Democrats are quietly maneuvering to get 4 senators to cross the line with plausible deniability for Democrat leadership, but they have to wait until the October 18th No Kings rally, when their rioting activists will be out in force. So Democrats could surrender the week after, perhaps with some face-saving Obamacare boost, for which hopefully Republicans extract maximum concessions on federal spending and workers. But if they don't, if Democrats want to keep going, Caesar will seize more estates and the legions will get paid. A word from our sponsor. One of the best ways to secure your Bitcoin is with a hardware wallet, a physical device that lets you keep your coins offline without internet connection. One of the most trusted names in hardware wallets is CoinKite, maker of the famous block clock. CoinKite devices are made in Canada. They're run by passionate Bitcoiners who've been at this since 2012, back when Bitcoiners were trading in person at swap meets. You can pick up hardware wallets and plenty of other goodies at coinkite.com/ProfSaintAnge. That's CoinKite.com/ProfSaintAnge. Okay, back to our show. What would it take to balance the federal budget? Does anything stop this train? As the government shutdown eases into its third week, odds are rising on Kalshi that the deficit could actually shrink from last year, perhaps by hundreds of billions if Republicans keep the shutdown going to the magic 61 days. That's the good news. The bad news is even hundreds of billions barely makes a dent in a deficit that's cruising at $2 trillion per year. So what would it take to actually balance the books? Of course, my inner Rothbard says it's easy. Defund every part of government that's not authorized under the 10th Amendment, which says the federal government can only do what's specifically listed in the Constitution, enumerated, meaning in full, Army and Navy, courts and embassies, the post office, and minting gold and silver coins. Everything else is unconstitutional, yes, including the Fed. That would give us a surplus of roughly $5.2 trillion per year. Spend the first decade replacing Social Security and Medicare with guaranteed annuities, the second decade paying off the national debt. Presto, you are debt-free with a tiny 1913-style government, the which is dead. Of course, the odds of this happening are pretty low, so back in the real world, the last time we ran a surplus was the 1990s. In modern terms, we turned a $1.1 trillion deficit in 1992 into a $700 billion surplus by the end of the decade. That's a $2 trillion swing in just 8 years. Sadly, the surplus lasted precisely 3 years until the combination of dot-com recession, Medicare and Medicaid expansion, and invasions of new and interesting countries plunged us back into the abyss. Still, when a pig flies, you don't ask how many years. Now, what drove the magical 90s was three things: lower spending, the dot-com bubble, and a pair of budget mechanisms that forced Congress to limit spending. So on spending, Republican Newt Gingrich and Democrat Bill Clinton famously hated each other, so the Uniparty was temporarily in civil war. After a series of government shutdowns, might sound familiar, they truced to essentially holding spending flat while the economy boomed. This took spending as a percent of GDP down by nearly a quarter, roughly half of which was reduced military spending with the collapse of the Soviet Union, which Congress normally would have respent, but instead held off. Next were taxes. Bush the Elder and Clinton both raised income taxes, but they actually didn't raise revenue, the Laffer curve in action, as in higher taxes make people work less, which lowers taxes. Instead, it was the dot-com boom that hiked capital gains by, again in modern terms, roughly $1 trillion a year. Money that, again, the Uniparty didn't get around to respending since they were at war with each other. Finally, two budget mechanisms that tied Congress's hands, so-called PAYGO, which required new spending be paid in new taxes unless it's an emergency, and the Balanced Budget Act, which capped spending. Both were gamed. Emergency took on fascinating new meanings, but both more or less worked until they expired in 2002, so Bush the Younger could have more wars, returning us to the bad old days. So it's possible to balance the budget, but it apparently needs two things: a uniparty at war, as ours happily is at the moment, and a president who doesn't blow it on new pet projects. On that, the jury is out. Thanks for tuning in. Remember to subscribe so you don't miss an episode, and go to petersaintange.com for daily videos and in-depth articles with charts and all the gory details. Okay, we'll be watching. See you next time.